the trade for us is short the margin and long the GFL. I've spoken about this graph quite a lot. Not only does it keep me in touch with what's happening in the product markets, but also the relationship between a refinery margin, so that is the orange line, and the GFL can be quite interesting, especially when we're getting to kind of a pivotal point in the year where we're coming out of maintenance and typically into a season where you should get decent product demand. This recovery in margins, it makes sense when we're in maintenance. So you're just getting less product out, whatever, like the cracks are supporting this margin. But now we're getting an instance where the GFL is also selling off, and that's further supporting the margin. So for me, as we go into higher run rates, I expect this relationship to flip.
As we mentioned, like in the last, couple of weeks ago in the last call, like probably like a simple summer margin. So as we like gasoline, effectively selling the straight run products, for which the CDE margin is super high. So I think that makes sense. Like the crude demand picks up, so the DFLs perform, and the simple margins come off into summer.
Exactly. So I think we can also have an instance where the crack holds and the GFL rallies. So the margin probably won't move, but the GFL will move, if that makes sense.
I mean, I think there's scope for the simple products to come off as well. Like, I think particularly when you look at those charts as well, like we're coming out of a period, or potentially coming out of a period where we've had exceptionally high refinery margins due to like war disruptions, with Russia. Like, so if we're heading into a more normal kind of period for refinery margins, then actually the last few years maybe aren't that reflective of where they could go.
So no, it'll be interesting. I do think, to be honest, the main mover should be in crude. I totally agree. The only caveat is if if this Russia-Ukraine situation gets resolved and there's all of a sudden a huge influx of crude,
but then
is there enough space for that in the market?
But then in that scenario as well, then you'd potentially also have like a normalization. I mean, there's different scenarios and how things get resolved, and does Europe keep sanctions on or not? But potentially you'll have also, in that scenario, you also maybe have an influx of Russian products as well back onto the market. So that may pressure the margin from the product side.
That is true. So I don't think anything is going to be resolved, to be honest, in the next 2 weeks. So I think for now, I'd feel fairly comfortable that, the trade for us is short the margin and long the GFL.